Hello everyone, welcome to this Your Overseas Home webinar, which today is focused on managing your money and finances when making your move to France. My name's Hannah Armstrong and I'm one of the team here at Your Overseas Home, and you may have also come across us as our sister business, Property Guides. As a whole, our business has been assisting buyers with their property purchases for nearly 15 years now. We aim to do this by sharing valuable resources and connections that will help you avoid pitfalls, save money, and crucially make this exciting step in your life as enjoyable as possible. Now, for today's session, I'm joined by two industry experts in the field of money and finance. First up, you'll hear from Paul Harris of Smart Currency Exchange, and then next, all the way from France, we'll hear from Katie Murray from the Spectrum IFA Group. For those of you who are joining us live this morning on a partially sunny Saturday morning here in the UK, if you've got any questions that you want to ask your panelists, do please drop those in using the questions tab on the right-hand side of your screen. We've also got some questions that we would like to ask you, so please use the polls tab, which is also again on the right-hand side, to answer the polls questions, which we'll be able to sort of weave into today's presentation, but all your answers there will be completely confidential. So our panelists for the day, first up, I would like to welcome Paul Harris. Now, Paul has been helping buyers manage their currency transactions for over 10 years now. He and the rest of the Smart Currency Exchange team are based in the UK and are on hand to help with any sort of types of transactions that you may have. So first up, I'm going to start by asking Paul to give us a brief introduction to Smart and how you can help the customers listening today.
Thanks, Hannah. Morning, everyone. So we'll be talking today primarily about how we can help you with managing the currency risk and how we can assist you with transferring your money into France for when you're purchasing the property. A little bit of a background about us: we've been around for around 15 years, and we're widely known in the industry as sort of the experts in the overseas property field. We've helped over 40,000 people in exactly the same position as yourselves to really afford and be able to understand how much things are going to cost from a currency transaction point of view, and so how much your budget in the UK can stretch towards the property over in France. So really look at working with you for the long term, and as we as I said, as we are the experts in the property industry, we can help you along with guidance and link you in with reputable partners as well that will support you along the journey.
That's a great intro. Thanks, Paul. And in terms of the buyers who are listening with us today, at what point in their buying journey should they start to think about currency transactions? When does that sort of come into the process?
As early as possible, really. If the actual process and mechanisms of transferring the money may be one of the very last things you do, but actually understanding how much you want to spend is probably one of the very first things you want to do. So if, for example, you've been on a comparison website looking at different properties, you will, when you're searching for properties, be searching for an area, searching for obviously for a country, how many bedrooms, what does it need, but there will always be a price point as well. So at that point, if you are looking at properties in a certain amount of euros, that's where we can help you out. We can help you really understand, how much is that going to cost you in sterling. So as early as possible, really, we can really start working with you and just help you understand how much you can afford, really.
That's brilliant. Thanks for clarifying that, and I hope that's useful to all of the listeners. In terms of then the different transfer options that a customer has, I know you sort of mentioned different ways that you can support people. What different types of transfers could customers do with Smart?
There are a few different options. The two main, if you've done any research already, the two main contract options that you would have probably seen are spot or forward contracts. So I'll briefly explain the two. So a spot contract is, for example, you agree a price today, you want to transfer the money straight away. We agree the price today, agree the rate, you send us the money and we send the euros out straight away to the destination. So that's short-term contracts that we can do very quickly for you. A really popular product for our customers that are looking to purchase property is a forward contract. So the reason this is so popular is because we can agree a price today, but you don't pay for up to 12 months. So the reason that's popular is, for example, if you are on a viewing trip today, you fall in love with the property, sign on the dotted line, and you've agreed that price in euros. That price in euros on the property that you signed for will stay the same. But there may be up to around 3 months between when you sign and when you actually complete. So in that 3-month period, the exchange rate will be going up or down. So it will only ever go one of two ways. It'll be either up or down. A forward contract protects you against all that market risk. So you could agree a price on a property today. You know how much it's going to cost you in euros. We can then say, okay, right, today it's actually going to cost you this much in sterling or whichever currency you have at the moment, and that rate is fixed for you for that period of time. So you know you have full peace of mind that you've got your price in euros and you know how much it's going to cost you in pounds. So if the market was to drop at all, you're not affected. You are protected at that rate that you've already agreed with ourselves. The only thing we would ask for there is a deposit on a forward contract. It's not a fee. It doesn't cost you anything extra. It's just 10% of the total price of the contract. So you pay 10% up front, and on the completion date or before the completion date, you pay the remaining balance, and then that's completed for you. There are two other options for you that again relatively popular with our customers. They're called orders. So we have an order to buy and an order to call. So for example, again, if you've agreed a price today, you're not happy with the exchange rate though. You want it to be higher. You've actually budgeted at a rate that's not quite where we are at the moment. Absolutely fine. So we can look at putting an order in the market for you. So we would target that exchange rate. One thing that's really important to stress here is that if we put an order in, we cannot guarantee that we will get to that exchange rate. So if you're looking for 120, by all means, we can try and target it. There's no guarantee it's going to happen. And, we haven't been at 120 for a little while. So it's one of those. We can target it. There's no guarantee we're going to get there. So again, it comes with a little bit of added risk. And the difference between, just quickly, the order to call and the order to buy is as it says. So the order to call, as soon as that exchange rate is hit, we'll give you a call, let you know, and then look to book the transfer for you. In order to buy, you'd send the funds to us beforehand, and as soon as that rate is hit, we buy the currency straight away for you and then send it out. So yeah, there's a few different options for you. They come with varying different levels of risk, but yeah, there's plenty of options available to you.
That's brilliant. Thank you, Paul. I hope that really helps. There's obviously a lot of flexibility for the customers in what they can do. Now, you mentioned there about targeting rates, and I know that this is an incredibly tricky question, and you always say to me it's a difficult one to answer, but there are a lot of people wondering what might happen to rates over, say now and the end of the year. Do Smart do any kind of forecasting? Do you have any insight into, well, what might happen with rates over the next few months?
Yeah, it is the $1 million question. What's going to happen with the exchange rates? And we don't know, is the honest answer. We do write a forecast. There are plenty of forecasts around in the market. You'll get some great information. So you'll get information about what events are coming up in the world, if it's elections, if it's obviously Brexit heavily at the moment. In truth, no one knows if the rate's going to go up or down. We can make predictions, so we could say, okay, this event might be coming up, could have a negative or a positive effect for the pound, but ultimately we just don't know. And that's where, like I said earlier, working with us from an early stage can really help, because we can then be tracking the markets with you. And then obviously if we see an increase, see a high point in the pound, we could look at potentially fixing an exchange rate for you at that point. But yeah, anybody that tells you that they know where the exchange rate is going to be going is I wouldn't like to say they were lying, but probably misleading you. And if they did know where the exchange rate would be going, they wouldn't be working in this industry. So they would have already made their money and be sitting on a beach somewhere having the time of their lives. So yeah, forecasts are great, but when it comes to actually predicting exchange rates, it's just a prediction. There's no basis behind that.
That's good advice. Thank you so much, Paul. We've had a question in from John this morning, who's just gone back to your previous point about your order to call or order to buy. Can you do that on a forward contract? Can you sort of merge those two, as it were? Could you talk us through how that might work?
Yeah, that's certainly possible. Yeah, you just have that conversation with your trader at the time. Absolutely fine. Yeah, because it's an order, we're essentially just buying the currency the same way as we would buy a spot or a forward contract. So you have that conversation with your trader at the time. There should be no problem at all with that.
Great, thank you. I hope that answers your question, John, there. Now, what do Smart charge in terms of fees and commissions for these various products?
So we don't charge any fees or a commission at all. There's no hidden costs, no invoices that we'd send you after we book the transfers. We do obviously make money when we're transferring funds, and it's very simple. The exchange rates that you see, say if you're googling it or you read it in the paper, the exchange rate today is X. That's where the banks are trading with each other, and it's either named the market price or the interbank price. We can buy our currency from the banks very close to that. And the rate that we offer for yourself is always just slightly off. So we make the money between the market price and the price that we offer for you. But the price we offer for you will always be set in stone. There are no extra fees on top of it. And your trader would always be very transparent with exactly what exchange rate you'd be getting. So no hidden fees at all, or commissions that we would charge.
Great, thank you, Paul. And Steve has asked this morning, how does the process work if he wants to make regular payments with you, say, moving his pension over every month, something like that, or is it just large scale transactions you do?
Great question. So we actually have a regular payment plan, which is an incredibly popular product that we offer. So yeah, there is often the misconception that all we're interested in is looking at large sums of money. In reality, we understand that the property buying journey doesn't end when you buy the property. So if it's a holiday home and you're looking to pay bills or renovation costs, or if you've moved over and like the gentleman said, he got a pension in the UK, looking to move that from the UK to France as well, and that's absolutely possible. For example, if you've got a regular monthly income, we can set it up as a standing order for you. And again, if you're happy with the exchange rate at the time, we can actually fix that exchange rate again for up to 12 to 24 months for you. So, for example, say you're getting, I'll just pick a number out there, say £100 a month. And it could be a lot more, it could be less, whatever. We can fix the exchange rate for that period of time, so you know that you're sending us £100 a month, and you're going to get X out the other side in euros, and it will be the same amount each month that you'd be receiving for us. And we can do that because, again, if we're fixing the exchange rate for up to 12 months, we're essentially booking a big contract for 12 times that amount, and then you just chip away at that contract throughout the year. So yeah, very popular product with ourselves.
Brilliant, great advice. Thank you, Paul. Now, a couple more questions for you, which unfortunately, it's always a worry to think about it, but what happens if a purchase falls through and a customer is already engaged in one of these forward contracts? What would they do in that situation?
Yeah, it happens. So if you've got a forward contract or any contract booked with ourselves, and if it's, depending on the circumstances, if you have a forward contract and potentially the property purchase is delayed, or you decide not to go ahead, but you still want to go ahead on a different property or in the future, we can do various different things. We can look to cancel it completely, or we can look to roll the contract forward, so we can extend contracts as well. So there's a full flexibility with those. If we do fully cancel the contract, and there may be potential costs that might have to come out of the deposit you sent to us, but the trader would talk to you about that at that point. So if there are any potential losses, we could potentially look at keeping the contract open until those losses are not there, basically, because we basically have to sell all the currency back to the market. So if we're holding euros for this transaction and the contract's cancelled, we sell the euros back into sterling, back to the bank. So if there are any differences there, then that could be potential losses. But yeah, your trader would talk you through all that.
Brilliant, thank you. Thanks, Paul. Question in from Patrick this morning. He's looking to purchase a property, but not until around December 2022. Is it right to still start thinking about currency now? When's the best time for him to contact the team?
Yeah, I mean, absolutely. It's certainly right to be speaking about it and thinking about it now. It gives you a really good understanding of again, how much you can afford and the costs that are going to be associated with the transaction, with the actual purchase. Sorry. So yeah, I mean, absolutely. I mean, we can, our sort of sweet spot to help you is within 12 months. But if you're looking at the end of the year, there's no reason why we couldn't give you some advice and guidance along the way, and you just build that relationship with the trader and the account manager that's been assigned to you.
Perfect, thank you. I hope that answers your question, Patrick. Another customer has asked this morning, we've obviously talked a lot about sterling and euro here in this context, but do you deal with other currencies? Can you help clients elsewhere in the world?
Yes, yeah. There's very few currencies that we can't do. and all the major main currencies, absolutely fine. Yeah, there's no issues there.
Perfect. That's really helpful. I hope that answers that customer's question. I think we've got time for one or two more. And I hate to always ask this question, but I think it's really important for the customers to understand. How do they know that their money's safe and secure with a company like Smart? And what measures do you put in place?
Yeah, good question. So we're fully authorised by the FCA, governed by HMRC. So we're a fully regulated payments business. If you're sending money to ourselves, the money comes into a client segregated account for yourself. So you have a client holding account. So if, for example, in the unlikely event that anything was to happen to Smart whilst we're holding funds or in the process of your transaction, the money will just get returned straight to the account that was sent to us. So yeah, if there's any specific questions or any extra information that anyone individually wants, I think my details will pop up at the end, and I'll be more than happy to send out some. We've got full documents to explain, all the safe and secure processes that we stick to.
That's great. Thank you, Paul. And yeah, just to confirm, we will share Paul and his team's details at the end. And we've had one last great question that's come in from a customer, Mark. He just wants to understand what the difference is between using a company like Smart and transferring with his bank at the point when he completes on his purchase.
There's a lot of different extra benefits to using a company like ourselves. I mean, if you're using the bank, you won't be getting a lot of guidance. There will the person you speak to on the counter may be an expert in FX, but it's very rare that you'll get someone that's going to give you any sort of guidance. It will be a spot contract, and the most important thing for yourself really is that the exchange rate that most banks give isn't a very transparent one. So you don't always get exactly what you've been promised. We've seen plenty of times in the past, and we prefer to talk about the risk management and education side, but ultimately the exchange rate that we're going to give you is going to be much better than the bank, in a nutshell.
That's brilliant. Thank you, Paul. That's been really helpful. And I think that's been a great introduction for the customers listening today. And there have been a couple of questions in that people have asked about specific requirements and specific currencies and things like that, and some of the questions around that FCA regulation. And so we will share Paul's details with those customers and to get your specific queries answered there. But I'm conscious of our time today. So thank you so much for that, Paul. And we will share Paul's details at the end. But now I would like to move on to our second panellist of the day, Katie Murray from the Spectrum IFA group. So Katie initially went to France as an Erasmus student in 2001 as part of her law degree, and she fell in love with the beautiful country, as I know many of you have, and has returned there afterwards after her studies to work. She's an independent financial advisor for Spectrum, and now works in the Bordeaux area using her legal and tax knowledge to help expat customers just such as yourself. So first of all, Katie's going to give us a bit of an introduction into Spectrum and how they can support you, and then we'll open up some questions from the audience. So I'll hand over to you now, Katie. Thank you.
Thank you, Hannah, and thank you to everyone at Your Overseas Home for letting us participate in this event. Good morning, everybody, and good morning from Bordeaux, where it is a lovely sunny day. We haven't had a great May, I have to say, but the weather's looking good today and promising for the next week. So, as Hannah said, my name is Katie Murray. I'm a partner at the Spectrum IFA Group, and I'd like to introduce you to our company. So we are specialist financial planners for British-speaking expats across Western Europe, including, of course, in France. We have been around since 2003, with all of our founding partners still actively involved in the business. In terms of geographic coverage, we are in over 50 advisors operating from 12 offices. Apologies, slight mishap on this slide there. In France, Spain, Italy, Switzerland, Belgium, and Luxembourg. In France, there is 23 of us, all of whom live and work locally within easy travel distance of our clients. So, regarding authorization, we are incorporated and licensed in France and in the other countries that we work in through European financial passporting services. Our authorization extends across the European Union. So as we are European based, we have had no problems before or post Brexit. There's been no disruption to our regulatory status and our business operations, and we have continued to provide the same level of service and support to our clients across the European Union. So regarding our advice process, we follow a clearly defined advice process, the first steps of which is a comprehensive fact-finding exercise, which allows us to fully understand your current financial position and priorities, your longer-term goals and plans, and your attitude to investment risk. Following this, we review the information gathered and prepare our report and our recommendations. We explain our proposals in detail, clearly, and address any questions. Our initial consultations, reviews, and recommendations are provided free of charge and without any obligation. Only if and when you proceed with our recommendations are we remunerated by commission from the company or companies whose solutions we are proposing. Our client charter, which is presented on or before the first meeting, explains exactly how we operate and how we are paid. Beyond our initial advice, we deliver ongoing long-term service and support, including regular reviews, meetings to ensure that our original recommendations remain fully aligned with and, where appropriate, adapted to your individual circumstances. We have developed long client relationships for the past 18 years. So our services, firstly, taking into account individual circumstances, we offer general guidance on structuring your finances for optimum tax efficiency, how to invest for maximum growth with minimum tax exposure. Specifically, with tax efficient investing, we consider reliable, well-established, locally compliant solutions for long-term investment. In France, this type of tax efficient vehicle is included in our proposals for investment and currency flexibility, for deferring and reducing income tax liabilities, for inheritance tax relief, and for nominating beneficiaries in accordance with your wishes. We advise on creating and implementing an investment strategy to match your personal objectives and attitude to risk. We have extensive investment experience, but actually delegate the day-to-day portfolio management to large, well-known professional investment managers. Our investment committee applies a careful screening and selection process to identify strong managers and then monitors performance and risk ongoing to ensure our chosen managers are still delivering as they should. As regards pensions, we have an in-house pension specialist who analyses your existing UK personal and professional your employer pensions to determine whether a transfer to an alternative scheme, such as a qualified recognised overseas pension scheme, may be more favourable. We complete a detailed and objective assessment involving an independent UK authorised advisor where appropriate, and if and only if a transfer is in your best interests, we will explain the various benefits and options available so that you can make the right decision. We offer guidance on wills and estate planning and to ensure that your assets and estates are administered in accordance with your wishes, involving a local lawyer where appropriate. We also coordinate with currency transfers for secure foreign exchange transactions with companies like Smart Currency Exchange. And to repeat our earlier point, we provide an ongoing service to maintain a long-term relationship with our clients to ensure that your financial plan remains fully aligned with your circumstances and any changes to your circumstances. Thank you very much, and I shall now pass on to questions.
Wonderful, Katie. Thank you so much. That was a fantastic introduction of how you can help the listeners today. Now, we do have a lot of questions coming in. I'll try and get through as many of them as possible, but for everybody, we will share Katie's details at the end if there's anything really specific or your personal circumstances that you want to discuss. So I'd like to start by talking about tax, and a few questions have come in on this, and particularly people asking sort of about double taxation. So when they move to France, will they be taxed on their income in the UK? How does that work?
So there is a double tax agreement between France and the UK that was signed way before Brexit and still remains applicable after Brexit. So under that double tax agreement, there are certain incomes that remain taxable only in the UK, such as government pensions. UK rental, for example, is only taxable in the UK. It is taken into consideration for the computation of tax in France, but there is a tax credit that's granted.
Great. Yep, I think that hopefully answers the questions on that. I'm sure people want to talk about their specific sort of personal circumstances with that question, because there have been a lot. But yeah, that's a great overview. Thank you, Katie. Now, when a customer moves to France, can they keep their UK bank accounts and investments?
Yes, you can keep your UK bank accounts. Once you move to France, you will have to declare those UK bank accounts to the tax authorities as being offshore bank accounts. Regarding your investments, you can keep them, but you need to understand that they will no longer be tax efficient. So, for example, ISAs, which are tax efficient in the UK, will lose their tax efficiency when you come to France. And so that is why you need to speak to a local financial advisor to discuss what investments you have and what are the tax implications going forward.
Great, thank you, Katie. So in terms of sort of some of those investments and savings and things, what would happen if a customer has an ISA in the UK? Can they keep that when they move to France, or do they need to change that in some way?
They can keep it, but again, you need to think about the implications of keeping it. So there is a tax efficient investment here in France called an assurance vie that is the equivalent of an ISA. 80% of French investments are in assurance vies. This is where the French people come put their money. So when you're coming to France, there are certain things that are worth changing, because the question is whether it's worth the hit of tax keeping that ISA. Because an assurance vie works very similar to an ISA, but whilst that money is kept in there, there is no tax on it. Whereas if you did have an ISA, the problems that I see very often with clients who have ISAs is there's huge questions about how they're taxed, whether it's growth, whether it's yield, whether it's dividends. And we're just finishing tax season now in France. And there's been lots of questions about people who have these ISAs, and then once they move to France, they are left to declare these ISAs themselves to the French tax authorities. And they have to separate it down into dividends and interest and growth in order to declare it properly. And then they get hit with income tax on that every year. So yes, you can keep your ISA, but the question is it worth the hassle of knowing how to declare it, having to declare it, and any growth that you're getting on it is going to be hit by French tax?
Thanks, Katie. That's very helpful. And I hope that people will sort of think about their personal circumstances and have a chat with you there. Now, somebody's asked, I have a SIP in the UK. Can I still contribute to it when I move to France?
No, I don't believe you can contribute to SIPs once you become non-resident.
Great. Thank you for clearing that up. That was great. Now, a lot of questions come around inheritance rules, people thinking about how they might want to sort of structure their finances or their property ownership to benefit the next generation. People have said they have heard that French inheritance rules are quite restrictive. Is this true, and what are the best ways around this for them?
There are certain rules, yes. Whether they are more or less favourable than UK inheritance depends on your circumstances. So France does have a specific rule as to who can inherit your real estate assets. So the more you buy property in France, the more that you will be subject to those inheritance rules. When it comes to other assets, such as the assurance vies, if they're set up before the person turns 70, they can fall outside those inheritance rules. So essentially, money kept in an assurance vie can be left to whomever you like. Property bought in France can be left to partners, because there's no inheritance tax between spouses or civil partners. But if you have children, or your partner has children, but you don't have children, you need to consider the consequences of that, because children are priority heirs in France, which is not the situation in the UK. So when, again, depending on your situation, that may not result in a huge tax liability. That actually may be more beneficial depending on the circumstances, but it's something that you need to understand and have that conversation with a financial advisor, because we've worked in France for many, many years, and we have a relationship with the local lawyers, and we understand the French inheritance law. And I have met clients who have bought properties with notaires and not fully understood when they were in front of the notaire what the actual consequences were regarding the inheritance tax on their property.
Great advice. Thank you so much, Katie. And obviously you mentioned there about the importance of talking to a financial advisor. Can customers still use a UK-based financial advisor in France, or are they better to use a French-specific company?
No, they cannot use a UK financial advisor. The result of Brexit is that UK financial advisors cannot advise EU domiciled clients, and vice versa. We cannot give advice to people who are UK domiciled. We can give general information, and then when you arrive in France or in Europe and you establish your residency here, then we can start advising you. But if you have a UK financial advisor, you need to be speaking to them now about the fact that you will be moving to France, and then again get in contact with a European-based financial advisor from the Spectrum Group to be able to talk about what the consequences are going to be going forward.
Brilliant. Thank you, Katie. Angela's just had a follow-up question about inheritance tax that you were mentioning earlier. If the customer has no family, are they able to leave a property to friends? Is that still doable?
See, can you leave the property? Yes, because under the Brussels 4, you can opt for UK law to English law, law of England or Wales or Scotland to apply to your estate. That applies to your wishes, so your wishes will be respected by the French authorities. However, the French tax man will say, thank you very much. If you leave your property to somebody who is outside of your family, you will be hit with 60% inheritance tax. So there is allowances for children, and then the allowances drop significantly when we're talking about brothers and sisters, nephews and nieces, and then after sort of nephews and nieces, then anybody else, I think a third degree of relationship is treated like somebody who's not related to you, and they will be hit with 60% inheritance tax. So again, this is where assurance fees allow you basically to leave money to whomever you like, irrespective of your relationship with them. But property, again, needs to be thought out before you purchase it, as in what the result may be. Leaving it to a partner is again fine, there's no inheritance tax, but what happens when that partner is left by themselves? Are they going to remain in France? So these are conversations I encourage my clients to have.
Great advice. Thank you, Katie. And another follow-up question on inheritance from Andy. Andy's asked, if he inherits money from parents in the UK whilst he's resident in France, could you give any indication what might happen in inheritance tax in that situation?
Yes, absolutely. So there is a double tax treaty for income tax between France and the UK, which is brilliant, and which again not affected by Brexit. And equally, there's a double tax treaty for in estate and succession matters between France and the UK. And this very clearly states that when the person who dies resides in the UK, all inheritance tax is paid in the UK. And even if the beneficiary is in France, there is no additional tax to pay. So we're very fortunate in that case. It's not always the case. There's thousands of double tax treaties out there. Not all of them cover certain types of income, and there's not that many. Not every country has a double tax treaty for estate matters, but the UK and France does. So that's very good.
Brilliant. That's great to hear. And I hope that answers your question for you, Andy. Now, a few more questions coming back to income and pensions and things like that. So first question, obviously, given the current climate, a lot of us are now working from home. What would happen if you wanted to continue working from home for a British employer, but actually do that from being resident in France? Do you have any advice on what the income tax position would be in that circumstance?
Well, I think that we have lived through a very interesting year, and I think that going forward there may be some changes in the rules and tax legislation about working from home for a foreign employer. But all governments have been dealing with the health crisis and the resulting financial economic consequences of that. So in the current state of law, if you work for a British employer in France, you need to either be traveling back to the UK to actually be carrying out your work, which involves travel costs, or you need to set yourself up under the French payroll system, or you need to sever yourself from your employer and work as a self-employed worker and bill them back again. So that is the situation as it stands with the double tax treaty between France and the UK, because it is the employer that actually is at risk the most. If you are working from your home, the employer could be considered that they have an establishment in France, and that if you're generating profits from that establishment, then they could arguably be taxed in France. So it's a very tricky area, and it's one that needs to be thought out. But if it, just as a simple question, can you work for a UK employer from France? Technically, no. You would be considered as being a French employee working for an English company.
Great, thank you, Katie. That's really helpful. And I know that affects a lot of people listening, so thank you for that really helpful insight. Now, we've had quite a technical question from Andrew this morning about pensions, so I hope I'm explaining this right. Andrew wanted to understand if he would lose the index linking on his public service UK pension if it was paid when he was living in France. Don't know if you'd be able to answer that in this circumstance.
I think that was something that was agreed under the withdrawal agreement. So this is a state pension, if I understand. State pensions will continue to grow in accordance with if you were UK resident. So under the withdrawal agreement, that remains the same. They will not be frozen, which is the case of Canadians and Americans, for example, who move over here. Their social security or state pension is frozen when they move out of the country. So it's not the case for UK nationals. Their state pension will continue to grow in accordance with the same way as if they'd remained in the UK.
Brilliant, that's great news, and I hope that's music to your ears there, Andrew. Thank you. Now, rental income. Ian's asked if he keeps a property in the UK and wants to rent that out, is he then taxed in France on the rental income that generates?
No, because that is one of the things that's covered in the double tax treaty. So you can live here in France and have a portfolio of properties in the UK that providing you with UK rental income. And provided you have no other French taxable income, then you will be paying no taxes in France, but you will be paying all your taxes back in the UK. However, where you have a UK-based non-taxable income like a government pension or UK rental, and you have state pension or private pension, or you have some other income here that under the double tax convention is taxable in France, then your non-taxed, directly taxed income will increase the taxable base on your taxable income. So that is the consequence. It's not directly taxed, but it is included for the computation of your tax on other taxable income.
Fantastic, thank you. That was really clear. I hope that helps you, Ian, with that. Back to sort of savings and investments. Laura's asked a question. Can she keep her premium bonds if she moves to France? And what might the tax implications be if she won any of the bonds?
Again, she can, but and premium bonds operate differently. If you have a small gain, then that is treated in the category of interest in France and taxed as such. I actually had the experience myself of working with a client who won the premium bonds many years ago. And the problem was that, so she won the million. When it was converted into euros, that converted as 1.3 million, I think, at the time. And she got heavily taxed in France on that. So yeah, it's, you know, I have lots of clients who have premium bonds and who want to keep hold of them because you never know. But once they become French tax resident, it would be too late. You don't know when you're going to win on the premium bonds. And when you do win and you are French tax resident, then the French tax is due, and it is really quite heavy. Whereas, you know, if you're in the UK, then the UK there wouldn't be any tax to pay. So it's a bit of a moot point, because when you're not actually winning anything, what are the premium bonds actually gaining you? And if you were to win it, you know, yes, that would be great, but you need to think about, you know, how would you feel by giving about 50% of it to the French taxman?
I can safely say I've never won on my premium bonds, so I don't think it would be a problem for me. Thank you for that, Katie. That was helpful, and I do hope that answered your question a little bit for you, Laura, and gave you something to think about there. I'm conscious of our time today, and there has been so many questions. It's wonderful to see people are so engaged in this topic and asking really great questions. I've got time for a couple more, and then for anybody that we haven't been able to answer anything, we will put you in direct contact with Katie to get those queries answered. But just moving on quickly, Julie's asked a question about capital gains tax. So if she sells a property here in the UK, having become resident in France and looking to move and live permanently in France, is she liable for capital gains tax in France on the sale of her UK property?
Right. If you are moving to France, so let's say you've moved to France, you've bought a property in France already, and you still have your UK property, okay? If you put your property up for sale prior to moving, and then you move and you live in your French property, and then that property then takes a year, 18 months to sell, then that is still considered, if it was your main residence before selling or before putting it on the market, and it sells, then that capital gain is not taxable in France because it was your main residence. However, if that period extends much longer, and I think the latest case law was 22 months, if it extends longer than that period, or if you rented it and then you moved to France and then you sold a property that was rented, that property is not considered as your main residence, so there's no exemption, and therefore it would be taxed in the UK. But there is something in the double tax treaty which basically says, whereas UK rental income is not taxed in France, a capital gain on a UK property is taxed in France and in the UK, but a tax credit is given by France, but that tax credit shall not exceed the tax that would be payable in France. So the situation, what that means is, if you have tax to pay in the UK and it is less, or there is no tax to pay in the UK, then there will be tax to pay in France. So you're either paying the difference between the UK tax and the French tax, or you are paying tax in France, whereas you wouldn't normally be paying that in the UK. That is just the situation, the double tax treatment, and tax officers will apply those rules.
Brilliant overview. Thank you, Katie. And I really hope that helps the customer with that question. Our last question of the day is quite a broad one, but Lee's asked this question, and it's a good question. Could you just give us a really brief overview of the sort of obvious differences in rates between the UK and France? So in particular, the income tax rates and the inheritance tax rates. Are you able to give us a bit of an overview of the sort of differences that people would expect to see?
Yes, absolutely. So the income tax rate, there is a tax-free allowance of €10,084 per person. And in France, you are always taxed together as a couple when you are married or you are in a civil partnership with somebody. So, and then it goes up to 25,710. And so between 10,000 and 25,000, you're taxed at 11%. And then over 25,000, I can't quite remember what the next barrier is, but it's 30%. And then there's 40%, and then the top one is 45%. So those are the income tax barriers. And like I said, it's your gross income divided by 2, and then once it's divided by 2, then you are assessed at those levels, and then they calculate the tax, and then they double it again, and that's how much tax you have to pay. Then there's social charges. Social charges will apply on capital income. It may apply on pension income if you're not covered by an S1 certificate, meaning that you've got your health cover covered by the UK. As regards inheritance tax, so for children, there's 100,000 tax-free allowance per child per parent. So in our household, we have 2 children, and so both of those would get 100,000 per from each of their parents. So there's rules regarding, again, if they were to lose both parents, then that would be a 400,000 allowance between the 2 of them. But taxes usually either can be paid on death or it can be paid on the death of a second parent. And then this is what I was saying about assurance fees. Assurance fees allow you to leave up to €152,500 to any beneficiary, irrespective of their relationship to you. So either that can be used to leave money that might compensate tax that might be payable on a house, for example, or it can be used as an extra allowance for your children, or it can be used to leave money to nephews and nieces who otherwise you wouldn't, to increase the normal taxable allowance. So like I said, for children, it's 100,000. For brothers and sisters, it's about, there's a 15,000 allowance. For nephews and nieces, it's about a 7,000 allowance. And then afterwards, the tax is calculated 5%, 10%, 15%. But again, if the money is in an assurance fee and it is over 152,500, then it is only taxed at 20%. Anything over that 152,500 per beneficiary is only taxed at 20%. So there are ways around it. Like I said, the advantage of keeping the money in the assurance fee as opposed to keeping it in an ISA means that you're not paying income tax on it, and that you know for certain what the inheritance tax benefits are going to be when your estate is administered. So it's not that scary, I don't think. And France also, for income tax, France also makes allowances for the people who are in your household, the children, whether you're employing a gardener, whether you're employing a cleaner, whether you've made some renovations to your home to make it more energy efficient. So there's a whole range of subjects like that. It's quite complicated, but yeah, that gives you a general flavour, I think.
That was a fantastic overview, Katie. Thank you so much. And thank you to all of the answers that you've given today. I feel we could chat on for another hour and talk about all of this, because there have been so many fantastic questions from the audience today. I apologise if there's anybody's question that we didn't get answered, but as I mentioned, Katie and Paul's details are on screen at the moment. We'll also share those with you via email early next week as well, so you've got them written down there. We'll send round a replay link of this session as well, so people can watch it again and refresh your memory, share it with family and friends if you need anything like that. But all that's really left for me today to say is thank you so much to Katie and Paul for your really fantastic contribution. And we're really, really excited for all of the listeners today for your move to France. We wish you every success and a happy move and relocation. The last thing I'm going to do is pop a quick link on the screen as well to the Your Overseas Home website, where you can access the replay to this and various other sessions that we've done on this topic. So that's just popped up on the screen now. But I'll leave you all to the rest of your Saturday. Thank you for joining us. Thank you again, Katie and Paul, and we'll see you all soon.
Thank you.
Bye.
Thank you all. Take care. Thank you. Bye.